Aloha folks, thank you so much for checking out this video. If you are new to my channel, my name is Mark, Mr. Dividend Investor. In this video, we are going to talk about a dividend company that has been giving dividends for 22 years without any reduction. Some analysis rated as high as 48% undervalued. A lot of the analysis recommend this company as a strong buy or a buy, and its 10-year return is up 296%. So if you want to check this company out, sit back, enjoy. Do me a favor, hit that like button. And also, if you are not yet a subscriber, hopefully by the end of this video you'll like what you see and you subscribe. Don't forget to hit the notification bell so you don't miss out on any of the videos that I put out. As always, please remember, this is not financial advice. This is just me sharing. Now let's take a look at this company. So the company I'm talking about is McKesson. Ticker symbol is MCK. This is a company that manages supply chain management solutions. They're a retail pharmacy, and they do like healthcare informational tech. So if you go to their website, they do like wholesale medical supplies. They work with companies like CVS and all that. Other companies, they do a lot of medical supplies and equipment, pharmaceutical distributions. So if you look at some of their Q1 financials results, you can see the revenue is here, adjusted gross profit. You can see the operating profit, tax, interest, and then if you go over here, you can see some more of the results, as well as the technology solutions, and then the medical surgical solutions right here for the Q1. Yeah. Now let's take a look at Google. You can see some of the P ratios, 37, dividend yield is 0.61. The high is at 375. The low is at 193. At the time of this video is about 354. So for the 5 day, it's up 1%. For the month, it's down almost 2%. 6 months, it's up 13%. For the year, it's up 42. And then the 1 year, oh, no data. Here you go, 78. And then for 5 years, it's up 134%. Now, if we go to Seeking Alpha, you can see the 10-year return, 296%. So now swinging at Yahoo Finance, I looked at this article. It's at October 5th, and this is Derek Lewis talks about the 3 ranked haircare stocks driving in 2022, and that's one of them, which is right here. You can see some of the chart. The chart illustrates the share performance of all 3 companies year to date. As you can see, MCK is beating all the ones that are in this one. Yeah. And then if you look over here, you can see some of the more information, and then Zach ranks it as number 2, a buy, and then you can see a little bit more of the EPS and sales history, and then some more of the data in here. So take a look at this video, take a look at this article, gets you a little bit of information about more about this company. Now if we continue to Yahoo Finance, you can see graph comparing the S&P 500 for the 2-year one. You can see it's completely beating it. If you go to the 5-year one, you can see it was S&P 500 was beating it, and then it turned around, and then now MCK is beating it much more, outperforming it. Top institutional holdings, you can see Vanguard has about this amount of shares, followed by BlackRock, State Street Global. You can see Berkshire Hathaway has some shares in here. Now if we go and swing to tip ranks, based on their analysis, they rated a strong buy with a 7 buy 1 hold, 12% upside to about $3.98. Their highest price target is at $4.30, and then you got your average price target at $3.98 and then $3.45. Now if you look at it, the top analysis, you can see pretty much majority are buys with about upsides of like 12%, 13%, 21%. You can see there's a pretty good amount of buys in here, only a few holds, no sells, as you can see. Now if we go to a little bit more analysis, smart score rated as 8, which is outperform. Hedge fund holdings have decreased. So if you go over here, you can see hedge fund confidence signal is negative, and they have decreased their holdings last quarter. You go to the inside trading, no trend detected. Now if we go to Webull, based on their analysis, there's 16 of them, they're rated as a buy. You can see a buy of 50%, 56%, a strong buy 25%. Now their price target is in the high of 423, average of 383, and then the low of 320. Now swinging over to Simply Safe Dividend, based on their dividend safety score, they rated as 88, which is very safe. And then you got your dividend yield of 0.61, and you can see the beta is low, market cap is large cap. Now if we go to the key metrics, you can see the payout ratio is 8 and the forward payout ratio is 9, and then maintain their dividend during the recession. If you look at the dividend growth, last 20 years 11%, the last 5 years 10%, and then the latest is 15%. And then look at that, from 2010 to on, you can see a slow and steady upward trend. 9 years consecutive increases, 22 years without a reduction. For your payout details, you get paid quarterly in the months of January, April, July, and October. Annual payout is $2.16, which breaks down to about 54 or 47. And then it could be here, based on Simply Safe Dividend, they say it could be overvalued. And then you can see the dividend yield is below the 5-year average. Price wise is a little bit closer to the high right here. If we look a little bit more, so some of the stats in here, you can see return on investment capital, it's about 37. Return on equity is a negative 207. So now if we go to Simply Wall Street, based on share price and fair value, their fair value rates are at 693. Current is at 357, and they calculate that as 49% undervalued. Now if we look at some of the overview, here are some of the positives and negatives. Became profitable this year, trading 48%, and then has high level of debt. So if you look at that one, you can see here are the what do you call that, information regarding that one. Yeah. If we go to bar chart, you can see based on their price target and their analysis, you can see the price high of 430, the mean of 388, and then the low 290 with the rating of strong buy, and you can see it's similar. And then if we break down even more, you can see 2 holds, 1 moderate buy, and 9 strong buy. Now swinging over to Stock Rover, you can see based on their analysis, there's 12 of them, they rated it as a strong buy. And if you break that down, this is 9 buy, 1 hold, 2 holds, and 1 buy. Now if we go to comparison versus risk and return, you can see S&P 500 and the industry, based on the 5-year return, S&P brings about 62%, and MCK brings about 142%. So all right, that's about it. I think it's a pretty good stock. You know, I think for me, if I was gonna put money into it, I have to kind of look more into it and see what else does it bring. I'm not sure if I'm sold on it yet. I think it's a pretty good stock, but I think I still need to learn a little bit more about it if I was going to invest on it. All right, so definitely go check it out and see what, and if there's other stocks that you want me to check out, leave a comment in the comment section. All right, guys, Thank you so much for watching. Hope you liked this video. Don't forget to hit the like button for me, as well as check out the other videos that I put out as well. So please be safe out there. Stay cool, keep investing, and I'll catch you guys in the next video, right? Take care. Aloha.